Okay, welcome back. You're with us here on Editors Roundtable. Large caps are starting to perform, finally starting to perform. And Nimish, give us the data.
Well, Prashant, I took this piece only because when I talk to market participants, the feedback is कि यार हमारा पैसा नहीं बन रहा. Nifty आप रोज चिल्लाते हो, all-time high. We are not making money. So, and I think now it's showing up in the numbers as well. For the September series, if you look at Nifty and the other indices, Nifty was in the green 2%, Bank Nifty was up 4%, but the mid and small cap were relatively underperformed. Small cap was absolutely flat, and mid cap was up 1 or 2%. We've seen a bit of, and why this is happening, right? So one, of course, we all spoke about the Fed cut. The central bank action, that's helping the large cap names. The return of Nifty Bank, because that was much underowned, so to speak, and we're seeing some bit of traction there. Again, funds, even the flows into mutual funds have shifted from mid caps to large caps. We can ask Anish about that, but broadly, that's been the trend, right? And generally, we've seen towards the fag end of the calendar year, the underperformers of the first 9 months tend to reverse, right? So even that could be a logical reason why it could be a time for the large caps. I'll just quickly run through some large cap names which have done well. Autos have done well. Bajaj Auto, M&M, Bharti all did well in the large cap names. In the losers, there was some momentum stock which lost momentum, right? Vodafone was down 36%. Oil India lost. The defense stocks like Bharat Dynamics was down. Patanjali Foods, Indus Tower, all were down as well. So clearly there are now signs that there is a bit of shift happening to the large caps and a bit of underperformance in mid and small cap. Anish, your take, because you've been talking about and been vocal as well that the valuations are not very exciting in the broader market stocks.
Yeah, no, I think clearly the risk-return trade-off in small and mid-cap doesn't look attractive at this point. And, a lot of the case is made that over the long term, you stay invested. So we went back and looked at what happens over the long term, right? And the point is, let's ask with what happens when you start at the extremes. So if you started in 2008, January 2008, when the market peaked, right? The 10-year return in the NSE 100 small cap index was 5%, 5.3 to be precise, right? So it's not great. In January 2020, just before COVID, the small cap index was at the same level as it was in 2008, so over 12 years. So I'm not saying small caps are never a good investment. I'm saying at the peak, if you enter, then you can have a very, very long period of underperformance. So the question you have to ask is, are we at extremes, right? And even if you started at 2008, even till today, after this massive small cap rally, the Nifty 50 has outperformed the NSE 100 small cap index by a good 2 percentage point CAGR.
Over what period?
From January 2008, right? So I'm saying if you start at an extremely high point and you look till today.
So Anish, are we at the extreme? And what are the signs as a fund manager you watch out for these kind of extremes and turn a little cautious?
Well, there are 2 or 3 things.
And also, is it time, importantly for viewers, is it time to take some action?
Exactly.
If they are heavily exposed to small caps, would you say, what's...
So we are recommending gradually booking profits in small cap, right? Now, to your question of so our equity evaluation indexes would suggest that valuations are quite close to what we call the red zone.
Okay.
This is an index we publish regularly, and that's what it's saying. Other signs that you look for when promoters are selling heavily, when there are lots of IPOs, etc., capital raising, it's typically
and
a sign that...
now we have some large IPOs as well, like Hyundai's of the world.
Yeah. And that's typically signs that the market is, even the promoters feel it's worth exiting those stocks.
They say that history may not repeat in the market, but it often rhymes. And what you just said on big, marquee IPOs, lots of promoters selling, I think it's important to keep those lessons in mind.
Yeah.
This time may not be different. Thank you, Anish. It's been a pleasure listening in to you. Thank you so much for dropping by and joining us in the studios today. Thanks for joining in. With that, it's a wrap on this edition of Editors Roundtable. Thank you very much for being with us. News and updates coming up right after this break.